About 1 in every 3 cups of tea in Pakistan is using Tapal tea. As a brand, it is one of the most well-known names in Pakistan, a market leader in a category that touches everyday consumption in almost every household of Pakistan. In a country with a thriving capital market, such a company would either already be public or its choice to remain private would remain an anomaly. In Pakistan, however, Tapal's decision to remain private is entirely within the norm. So what is it about Pakistan's capital markets that keeps one of Pakistan's biggest corporate names from becoming listed on Pakistan Stock Exchange? So what is the story of Tapal and what makes it such an iconic Pakistani brand? What would it be valued at if it decided to list itself on the stock exchange? Why does it choose not to? Farooq Tirimzi investigates. The tale of Tapal starts shortly after partition in Jodia Bazar, Karachi, where the Tapal family began their tea business, importing tea from Sri Lanka and selling it wholesale in the markets in Karachi. Jodia Bazar to this day is the largest wholesale market in Pakistan. It helps that it is located a few miles from the Karachi port and is in the city that has the largest concentration of Pakistani urban middle class. The founder of the company was Adam Ali Tapal, grandfather of the current CEO, Aftab Tapal. The store in Jodia Bazar soon grew as Karachi went on from being a minor city in British India to becoming the largest city in Pakistan. The tea business outgrew the store and started marketing far beyond the retailers and occasional consumer buyers who would come to the store. It took Aftab joining the family business in 1975 after having received foreign education for Tapal to go as a thriving mid-sized business to becoming a household brand name it is today. Aftab changed the packaging to compete with the likes of Unilever, and under him, the company began expanding in all sorts of ways. Very quickly, Tapal was being said in the same breath as Unilever's Lipton and Brook Bond. For a local company to make its name in that milieu was no mean feat. For them to continue to hold their ground even after Unilever bought Brook Bond to become a dominant tea player in Pakistan, well, it takes more than just luck. It takes skill and determination. Those skills and determination have taken Tapal to becoming very big. Tapal had gross revenues just short of 56 billion and net revenues of 45 billion after subtracting the trade discounts and sales taxes. One other factor that makes Tapal's achievement more impressive: tea used to be categorized as an essential food item by the government and subjected to minimal of sales taxes. However, since 2017, tea has been subjected to a full sales tax regime. To have your core product go from facing very little in terms of sales taxes to suddenly having to pay full sales taxes, and several informal sector competitors who evade sales taxes, makes the company's ability to command high margins even more impressive. Brand building, however, is not all there is to running a successful business. There are operations, supply chains, distribution, and administrative costs, all of which can start rising rapidly if the business is not managing a tight ship. On that front too, Tapal appears to be a very well-run company. If this was a company which was looking for outside investors, it would find them quite easily. We want to state categorically that we have no reason to believe that Tapal is seeking an initial public offering or seeking an equity sale of any kind. The point of asking what Tapal is worth is just to explore how valuable one of Pakistan's best-run private companies could be. To conduct a valuation of Tapal, we looked at its financial metrics and we compared them to those of publicly listed food and tobacco companies of a comparable size. We then looked at those 9 companies across 5 valuation multiples. Like any valuation exercise, we got a range of values. The lowest was on the basis of enterprise value to sales, where the peer group had an average enterprise value multiple of 2.6 times most recent 12 months revenues. By that metric, Tapal is worth approximately $556 million. The highest was through price to book value, where the peer group multiple was 9.4 times book value, and this resulted in Tapal's value of $1 billion. If Tapal were to list itself on public markets, it would find its valuation somewhere between these two numbers. It would be one of the most valuable companies to be listed on Pakistan Stock Exchange and the third most valuable food and consumer goods company, only behind Pakistan Tobacco and Nestle Pakistan. But why talk about the valuation of a company that has no intention of getting publicly listed or even being sold to other private investors? Because it represents a core problem that Pakistan's equity markets face. Some of the most attractive businesses in Pakistan remain private and have no intention of ever being publicly listed. And even those that do become publicly listed, they tend to remain closely held, which means there is often not enough trading volumes in those stocks for investors who may want to buy their shares. It becomes a chicken and egg problem. Global investors have limited interest in Pakistan because so few of the most promising investments in the country are publicly listed. So few of them are publicly listed because not enough investors are coming into the market. Meaning that the companies that do consider getting themselves publicly listed do not get attractive enough prices to come to market.